Good morning, everyone. We are live. Welcome to episode 3. Yes, 3 episodes in already, coming to you live and direct wherever you currently happen to be. Thank you to our sponsors, of course, MPowered, the intermediary and news page, for continuing the support and the care packages. As always, we are packed to the rafters with stuff within which hopefully there will be at least one nugget of gold you can take away and nurture. In the news this week, all eyes are on the Bank of England. Are we looking at the market with rose-coloured spectacles, though, expecting rates to continue to fall, or will mortgage rates rise before they fall again? We've seen Virgin Money's latest 5-year product with an option to switch after 2 years, HSBC increasing their maximum borrowing age, as well as some lenders reducing their stress testing on buy-to-lets, leading to the question, is the buy-to-let market poised for a renaissance? Our key topic this week, however, is social media, which always promotes a healthy debate. Are we now suffering from overkill, with people just generally oversharing their every move? Is it causing a mental health crisis as we all judge ourselves against the perfect lives and businesses people portray? Or is it the most important thing to do to have any chance of success in today's crowded marketplace? How can we stand out from the crowd? Why do some people believe you have to assassinate others in order to big up themselves? And does anyone really give a toss about it all anyway? All these questions and many more will be discussed with our overly large panel of beautiful renegades this morning. So joining us are Daryl Doffer, the mortgage expert. Welcome, Daryl.
Welcome.
Mike
Morning. Good morning.
Statten, Mike Statten of Statten Mortgages. Morning.
Morning.
The wonderful Katie Eatonton of Lifetime Wealth Management. Good morning.
Morning.
Ken James, Contractor Mortgage Services.
Good morning.
Hi, Ken. And the legend that is Bob Singh, the lone sheikh himself, Chess Mortgages, who's joining us from, you're in Dubai, aren't you?
I'm in Dubai, yeah.
Well, someone.
Morning, everyone.
Well.
Morning.
Good
One
morning.
of his many
Good morning.
officers, I'll have you know.
So,
remotely.
I've changed my first question actually, because this story broke today, which comes from again the beauty that is news page. These stories break, and we get to know about them straight away. We know that times are difficult for clients at the moment. We know that, and I've asked people generally how they advise their clients, but we've just had George Freeman, the former minister for Mid Norfolk, who's resigned from his position because he reckons he has now an inability to cope with skyrocketing mortgage payments. So his mortgage apparently is jumping from £800 a month to a daunting £2,000 a month, which many of us know that some of our clients have had to put up with. But he's found it unmanageable on his ministerial salary of over 118,000. So is this a question of basically the politicians are finally starting to understand the issues that the average man and woman on the street is facing, and what do you make of it all? Ken, how about you? What do you make of this? Let's start with you. You were dead centre on my screen, so I've started with you.
Excellent. Cheers, Monty. Well, you've got to laugh, haven't you? £118,000 a month is a minuscule salary to be on. There's people that bite your left arm off and your right arm for 118,000 and are still managing to pay £2,000 a month. We've all seen it. I mean, all of us brokers have seen exponential growth in regards to the cost of mortgages. But that just sounds ridiculous, doesn't it? I think one thing that it will bring out, I mean, the likes of Rishi Sunak's never going to be affected, him and his million. But it's nice to see that actually the impact of real people's problems are actually starting to transcend into politics, because some of them don't live in the real world, do they?
No, absolutely. Hey, Katie, what are you seeing with your clients around this? Presumably, you've got a lot of clients in this position.
There's definitely been a lot of concern, a lot of worry. Luckily, the majority of my clients are in the slightly younger age bracket. So when it's come to remortgaging, there's been wiggle room to extend the term to make to make the impact a lot less. But I've found the biggest jump really has been people that have done part and part mortgages, because the interest aspect of their mortgage has obviously gone up massively.
Yeah.
They've been the ones that have been most impacted, because that chunk of the mortgage hasn't obviously reduced over the term, and that's where the biggest jump has been.
Yeah.
But no one's offered to resign from their job because their mortgage payments have gone up. I mean, that just doesn't even make sense in itself. Why are you resigning from a job?
Yeah.
How are you going to pay
Yeah,
it?
it's sort of a contradiction in terms, isn't it?
Yeah, like, that's not going to help.
Yeah. So he must be pretty sure that he's actually going to move into a job that's paying significantly more than 118,000,
Well, yeah.
which
Where are they?
yeah, where are they? Well, Bob, what do you make? You deal with a lot of the high net worth people as well.
Well, some, yeah, not really. I worked it out, and he's on £6,000 a month net. So, and I'm pretty sure he got an interest-only mortgage paying 1.5%. Now it's gone to 4.5%,
Yeah.
and that's why his payments have literally trebled. So it's his own fault. So either he's not heard of product transfers, or he's got a crap broker. So I'm not sure what's happened there. But
Or he's spending too much with the other £4,000.
Yeah. Yeah, exactly. It's
must have
interesting, isn't it?
and perks as an MP or a minister. So I think there's more to it than meets the eye, as Andrew said. He must have something lined up. He's probably got another corporate job lined up.
So Daryl, this example, I know we're sort of making light of a really serious example. Really, do you think it is time for the government to really intensify their efforts in helping people struggling with mortgage expenses, or are they doing enough already?
Well, I think if you've only got to look at that example of £118,000 a year, I dare say it was probably a backbencher. I think the front benchers are probably largely unaffected by this. But as a general rule of thumb, yeah, I think there needs to be more effort looked at, certainly with affordability as a whole, not just for high net worth clients, but across the board.
Yeah.
Well, the mortgage charter helped, didn't it, for 6 months? I think that should have been longer, given that the inflation wasn't going to go away in 6 months, was it? So to launch a 6-month mortgage charter was maybe not the right thing to do. I think it should have been longer, so give people more time to get back on their feet.
So you'd like to see that extended?
Kick the can down the road.
Yeah, yeah, I agree, Kate. I think it was a bit of a band-aid, wasn't it? It was, and to be honest, when the mortgage charter in, do you remember, guys, interest rates were not where they are now, like 4 or 5%. They were 6-7%.
Yeah, correct.
Those people that wanted interest only thought they'd be saving hundreds. And in fact, when they saw what their interest only payments were going to be, I think a lot of them were taken aback by how little of a reduction it actually made in the big scheme of things. So how much assistance did it actually offer?
I've definitely got clients that didn't bother doing it because the repayment after wasn't worth the saving for the 6 months.
Yeah, no, it's interesting. Mike, how do you foresee this very much to be a continuing trend for the remainder of the year, or do you actually sense that people are starting to anchor themselves on the new pay rates?
Well, for me, I'd say that it's quite demographic as well. So where I am, house prices aren't extortionate. But when you take into account there's George Freeman, who has resigned because he's gone up from £8,000 to £2,000 payments on 118,000 salary. I'm looking at clients that are on £25,000 to £30,000 salaries, and their payments are going up from £425 to £600. And in the grand scheme of things, that's a massive jump for Joe Public. I just think with George Freeman, it smacks of how distant these politicians are from the public. And if you wanted to look at it from outside the box, George Freeman's in a position where he is able to assist and campaign to get these rates down. And rather selfishly, he has taken a step back. And my personal opinion of most politicians is he's looked at his own pocket, his own bank account, and thought, I'm jumping this shit because it's hitting me now. I do think we'll see more ministers follow the same path, but where is he protecting his constitutory?
Yeah, constituents. Yeah,
Yeah,
absolutely. Yeah,
for
fair
me,
point.
it's just completely selfish. And rather than hitting the media with him campaign saying that he's changing jobs, how about spending his time rallying to get these rates down, rallying to get schemes like the mortgage charter back on board? How about helping the public that have kept him in a job for several years?
I agree with that. Be interesting to see if he supported Liz Truss, wouldn't it? I don't know the background of that. So anyway, that's interesting. The other story that broke today, which I also thought is worth mentioning, is on the insolvency data that's just come out, and company insolvencies, they've hit the highest level for 30 years. So surely that's going to feed through to the Bank of England in terms of what they're going to do next. How do you see that feeding through and affecting things? Because that's a pretty big stat to come out today. Bob, what do you make of that?
Yeah, this has been bubbling for a long time. The level of insolvencies, the level of personal debt in the country runs into the trillions now. And a lot of it's going to be the bounce back element as well. So I think we should not look at 1 month's figures in isolation. All the bounce back payments that people couldn't make or took fraudulently, they're all closing their companies one by one. They're trying to sort of get away from it. Paying back that bounce back loan. But it just shows that the economy generally isn't as strong as maybe what we think it is. So this is why I think the Bank of England maybe need to act sooner. Forget about May, April, June. We want the rate cuts in March.
Daryl, any thoughts from you on this particular part?
Yeah, I think, across the board, both small and large companies are having some difficulties, definitely. Certainly when it comes to restructuring their businesses or common debt arrangements, it's rising, and it is very alarming. I think, the difference between obviously what we're seeing today and what happened in obviously the 2008, 2009 recession, it does suggest that there is certainly some resilience left in the business landscape, but it is eroding quick.
Yeah.
So interesting to see how 2024 market trends continue throughout this year and what impact it's going to have. But certainly 2023 was a huge impact for businesses, and with high interest rates, it's affected everybody, certainly businesses, small and large.
Okay.
Sorry,
Very
Andrew.
go on. Okay.
The cost of borrowing is very high. Commercial loans are now 9-10%. And if you take one of these loans from like Funding Circle or that sort of entity, businesses are paying 15 to 20% into interest rates. It's credit card prices. That is unsustainable. We need rates to come down.
And the business rate relief that everybody was receiving, obviously now that's all disappearing. So people all of a sudden are finding that they're going to have to find the cost for that, and it's extortionate. So there's a lot of business. I mean, you look at most of us that have been around for, even if it's only a short while. I remember when I first set up my business, I was self-employed before, but I set up Contractor Mortgage Services in 2016, and I'd been operating only a short while, and then the Brexit announcement came out, and I lost so many deals in one day. And it's like, all of a sudden, if that's how you're feeding your family, you can imagine if that's just one event. And you look at how many events we've had since then that businesses are having to fight through. I mean, really fight through to survive. It's unsurprising to see these numbers. But reflecting on what Bob said, I wonder how many of those are fraudulent companies that were set up just for bounce back. I wonder if we looked at
that's a good point.
that.
I mean, I'd like to echo what Bob said and Ken just touched on as well. When the first thing that came to my head when I looked at those figures was this is an aftermath from the pandemic, from the handouts from the government for people with limited companies, people taking hands out, and we're seeing an aftermath of all the free money that was given out. Not only that, during the massive furlough period, a lot of people, when they were unable to work, did go and set up their own limited companies. And I'm not talking about fraudulently. I'm talking about they genuinely did set up limited companies to tide themselves by. Now, some of these people have realised how hard it is to run a business, and that there's no such thing as flexibility when you're a director of a company. You don't get the family time that you thought that is that mythical being out there. Your business is your number one baby, and with that, and when you're a limited company director, you don't have that luxury time all the time to spend with your family. So I do think a lot of these businesses, again, are from the aftermath of furlough, COVID, lockdown, and they're closing them up to go back to normal paid salaries, where they've got where they've got structure, where they've got security, because it just isn't easy to run a business. Add that to utility bills increasing for businesses. Just think it was always on the cards. It wasn't a massive surprise to me.
Yeah, that's a great point. I love that point. Just a reminder to everyone, actually, we got the comments section. So if you do want to make comments, I'll try and make it as interactive as possible. There's a comment here, actually, just looking at the current environment. The biggest issue for most of my clients have been landlords whose payments may have trebled. Add to that the less attractive tax treatment for individual landlords, and many are no longer able to make a profit. So obviously that's a big thing. We've seen some of the lenders actually reduce their stress testing on their buy-to-let products to try and help. Katie, do you do much in the buy-to-let space, and how have you seen this affect your clients?
Have we lost her?
Okay, we've lost Katie. Who wants to take that one?
Well, again, where I'm based in Mansfield, it's a bit of a landlord's paradise here. I am seeing quite a few portfolio landlords selling off their buy-to-lets. There's an element of cowboy landlords as well. Landlords who jumped on the bandwagon 5, 6, 7 years ago when they could get a mortgage for £180 a month and charge £600 a month in rent, and rather than using that rent as an investment or as a business, they were living off of it. It was another stream of income. It was disposable income, and these landlords are now seeing their disposable income shrink. They haven't got that £500 extra spending money. And in some instances, it's cut to £80 profit. And I just think some of these landlords are thinking, do you know what? It's not worth it. But it also has a flip side as well, because I've seen an increase in renters coming to me for mortgage advice, because it is becoming cheaper with rates dropping to get a mortgage than it is to rent.
I think a lot of landlords, they can fight the deal, wouldn't they?
Sorry, Ken, go on.
So I was just saying, a lot of landlords, myself included, when we did deals, because actually the stress testing was easier on 5-year fixes than 2, to get the money we wanted, a lot of us did 5 years. Now, if you bought in the last couple of years, well, actually your rates aren't due to renew yet, so you're still sort of safeguarded for a period of time. But that's not stopping a lot of landlords from saying, well, listen, rental incomes, I've got more chance to earn more from renting now because there's a demand. So even though I'm not paying anymore, and I'm not one of the ones that have been affected by the rate increases yet, I'm going to still raise my rates. I'm still going to charge my tenants more. And if they don't like it, well, let's get rid of them, because there's a demand now. I can get somebody else in who's willing to pay the amount I want, and I'll cream it for a bit. And on the flip of that, you've got people genuinely who have had their rates come to an end. It's very difficult to remortgage, do remortgage elsewhere. So it's usually a product transfer because of the way the stress testing's gone. And they're truly suffering. Their lives have been affected, and some, God forbid, some of us are having to stick our hands in our pockets and actually make the difference up. So I think there's a mixture of genuine landlords who are struggling and need to increase rates because of the pressure on their costs, and people who are just milking it. Yeah.
Katie,
Section 24 was an unmitigated disaster by George Osborne. It's crucified the rental sector. Landlords have been suffering for such a long time, paying over the odds, and the COVID saga didn't help at all. Rates increased. I know landlords that are sort of getting less rent than they're paying out on the mortgage at the moment. and they're having to increase their rents quite substantially just to sort of keep their head above water. So it's going to be tough for another couple of years, I think, for quite a lot of landlords.
Yeah. Katie, just bringing all this together really before we move on. Just you mentioned you had a lot of younger clients. Obviously, I'm too old to have younger clients nowadays. You're representing the youth here.
I
obviously.
wish. I wish.
We're all past it. How are your younger clients, maybe young business owners or young people looking at buy-to-lets? How are they approaching this market? Are they approaching it with trepidation, or are they not really bothered?
To be honest, the buy-to-let business that I'm doing at the moment is mainly remortgages, or it's people like setting up limited companies. Actually, that demographic is older. The younger people are just trying to get, their first property and actually move out of home or whatever. It's more. I've noticed. Get my words out. Sorry, I'm still baffled as to why my phone just died and I disappeared, and then I couldn't hear anyone.
Right. Katie, you're amongst friends.
No, I know, but I couldn't hear anyone, and I was like, if anyone's talking to me, I'm just sitting here smiling. It's a lot of limited company buy-to-let business at the moment. I'm seeing, and again, it's because the stress rates are lower. They can offset a lot more. I mean, realistically, buy-to-let businesses and landlord, they're the only business that gets taxed on their turnover. And until that changes somehow, it's not profitable at the moment. I've had several clients that have put their buy-to-lets on the market because they're paying people to live in their house. They're paying people to live in their properties, because when you factor in the tax, the mortgage and everything else, there's no money in it.
I think for the TikTokers in the group of who know, it's like the Bobs and the Dows and myself, one thing that you're seeing a lot on TikTok, and I don't know if that transcends over to the Instas and the rest of it, is this, here's a house I got for £50,000 and I didn't have to pay a penny for it. And I think the youth are being pulled in through social media into what they seem to think is easy money. But actually, when they get into it, well, you have to pay for my program. I will teach you how to do it. And I think a lot of the youth are being pulled into that and realizing actually it isn't this glossy, painting that they're seeing, and actually behind it is quite murky and dark, and it's going to cost them money. So I think a lot of the youth are being pulled in that way, but then they're realizing it's not really that feasible.
But there's a lot around. I find that's more in the rent-to-rent space. That everyone thinks that they're going to have this massive Airbnb portfolio by just going and renting someone else's.
All that,
I mean, I haven't experienced it yet with many clients. Mine are mainly homeowner, resi stuff.
Right, thank you. That's an almost seamless segue into what sort of our main topic. So I want to move into like the whole social media debate now, which is obviously something I'm very passionate about. I was ridiculed by bosses in the previous company for writing the first industry mortgage blog in about 2005, 2006. And I think the comment was, if he wants to write for Shoot magazine, he should piss off.
And you did, didn't you? You did.
No, and I did.
And now
I'd have loved to write for Shoot magazine. And I remember doing my first presentation on social media to a bewildered conference of brokers back in 2009, 2010. Just after I joined the Twitter sphere. So there's so many questions around this, how it's being used now, both positive and negative. And I know, and the audience knows, that looking at you all have very different personas on social media. So let's start with a simple one. How did you get into social, and how did you create your persona, and what have you learned about it? Daryl, the mortgage geezer is...
Right.
I like it. I like your persona. It's very different. How have you had criticism with it? Tell us about your journey with it.
Okay, no problem. Well, let's go back probably a year. Okay, a year. I was eating breakfast, and my girlfriend was watching a TikTok video, and it was the repetitive sound, trending sound, and it was driving me nuts. I never heard of TikTok, and I thought, well, what is this? What are you doing? What are you watching? Oh, I'm watching a recipe thing. And I was like, okay, great. Then it was a pet thing. Then it was something else. And I thought to myself about a year ago, how can anybody watch this? You know, I've got two older daughters, 22 and 21, and they're on it. They use it socially as well. They're looking at either things to buy or holiday destinations. And it got to about June this year, and I thought I could see quite a few influencers coming to market, certainly in our sphere, within the mortgage market. And some have been around, you know, like Bob, in a couple of years as well. Ken as well has been out there for quite some time as well. And I thought there's definitely a good message to get across. And I think with all of the experience that I've learned as a qualified advisor, as well as real life experiences, let's get this out there. So the image and what you see here, I was born early 70s. I'm very much an 80s kid, child, guy. I grew up listening to sort of the likes of Wham, Club Tropicana. And I think the night before I actually went live with, obviously, with the name The Mortgage Geezer on the TikTok, I just wrote down a list of things and I thought, Essex Boys, yeah, I've just watched that. And there's a character in it called Tony Tucker, and he's got a blonde wig. Even though the original Tony Tucker, because it's based off a true story, has got brown hair, I actually like the blonde wig. So I thought, well, let's just go with that. Club Tropicana, bit of an 80s style. Yeah, and that was it. So that was kind of created. And I thought, you know, let's buy the 80s phone. So here's the 80s phone. I don't know if you can see it. So it's not real, by the way, because it'd be worth a bomb. And I thought, let's just get my voice out there, my message out there, and, you know, do some education. But it is alarming what I see out there. But that's kind of my journey. There's some good bits and there's some bad bits, definitely, with the social media side.
So you've just shocked the audience with the revelation that's not your own hair, Daryl.
That's the thing. People that don't follow him don't know that is a part of the image, part of the, you know, this is, you know, they think it's genuine. They think it's, oh, is it real?
Yeah. And Bob, Bob, you've been. I mean, you've got like about a gazillion followers on TikTok and your channels, and you mentioned to me before that you're actually getting some really good lead flow from it. How has that developed? How have you managed to do that? Because you're obviously very different from Daryl. How have you prod your journey?
My colour.
Your what?
No, we're all brothers here, Bob. You know that. Come on.
I mean, my journey has really started 4 years ago when COVID started. I'm a member of a fairly large Asian Facebook group. And I thought it would be a good idea to do a live show every Sunday, helping people understand their finances during COVID. And that developed into a weekly program. I'm now up to sort of 150, 160 episodes, where I do 1 hour every Sunday. And that kept me busy for a long time, but obviously from that group only. You know, my lead sources weren't outside that particular Facebook group. And then a couple of years back, I was offered another Facebook group, which I bought for peanuts, really. And that's got 15,000 members in it. The Asian Facebook group has got 90,000 members. And I was the most sort of prolific mortgage guy on there. So I did, you know, quite well from that as well. So
yeah,
I think sometimes it's being in the right place at the right time and, you know, choosing that opportunity, because nobody else 4 years ago was doing live mortgage advice. Not many people were. And definitely not for 1 hour, where, you know, the format of my show was half an hour news, a bit like what we're doing now, you know, XYZ launches that product, or this Bank of England rate movement, and that, you know, sort of general market news. And then I'd pick a topic, be that life insurance, or be that let to buy, or limited company buy to lets, you know, then I'll talk, you know, half an hour about that. So, you know, and that format put me on the pedestal in that group as the sort of mortgage guru, or the mortgage maharaja, if you like, you know.
Do you know what I think as well, Bob? Sorry to jump in here.
Yeah, go for it.
Is the fact that, you know, you're only a few years away from drawing your pension, Bob, and you've got over 20,000 followers. This is just amazing. I mean, it's never too late to start. I think that the main question.
It's never too late to start. I mean, I wish I was 30 years younger. I mean, I could do a lot more, but it's fine. You know, Monty and I go back a long way. I mean, we
A
were
long
John
way.
Smith together, you know, back in the day. And I started my mortgage journey in 1993, in fact.
Yeah, I was 94.
Yeah, 1994. So we're sort of in the same industry for the same time. But social media, for me, has transformed my life. And if anybody's listening, it's never too late. And I, like many people, hated the sound of my own voice. Hearing it back on, you know, when you listen back to your broadcasts or whatever, I thought, do I really sound like that? And I thought, sod it. If I sound like that, so be it.
Yeah.
And if I look like what I look like, I can't help that either. So I just went,
Exactly.
you know, I did
Wigs, telephones, whatever, you know, just throw it in.
You look great, Bob.
I just started it, and obviously because I've grown up in this country. I came here as a child, aged 8. So my schooling started from the age of 8. I never went to school in India.
Wow.
I bunked it. I used to bunk every day, pretty much. And, you know, I've grown up with English comedy in the 70s, 80s.
Yeah.
So I include a lot of comedy in my broadcasts, whether that's a quick joke or humor. And I think people like that. I think people want to see the person behind that knowledge or that expertise as well. They don't just want to, you know.
I think that's a really good point. Being authentic.
You know, people don't want to know what's a fixed rate because they can get that on Google. They don't want to know what the base rates are because they can get that on Google. They want you to educate them and inform them in a way which nobody else does.
Yeah. Well, I certainly do that.
Yeah. What about, I think Daryl can learn a lot from you to bring humour into his. They're very dry, yours, Daryl.
So you know, I do 3-4 lives. I do a lot of posts. As soon as I get a scenario in the office where I've got a query or it's a difficult situation, I'll do a TikTok. 2 minutes, 3 minutes. I'll say, just had this case, difficult case, XYZ scenario. I think we're going to do this, or this is how it works, and this is what you need to look out for. And that's what people want. They want real live situations which they can relate to. And then I get 10, 20 calls a day.
Yeah. That is incredible. That is incredible. TikTok's quite new for me, it's amazing how quickly it can work.
It takes time. It takes time. The algorithms have to work. You have to put the right hashtags in. Maybe sometimes choose the right music. But TikTok is now promoting longer videos. Gone are the days when it would promote a 10-second video for you. They are realizing that people want quality content. So the longer videos, the 5 minutes, the 7 minutes, or even the 10-minute videos are the ones that are going to get pushed out to the masses.
And Ken and Michael or Katie, actually, how have you found it? There's question here in terms of someone who started recently and already got a couple of leads from TikTok. What other advice would you give to grow your following, and how have you guys found it?
Yeah, for me, it's all about identity, having a bit of a persona. I mean, obviously, very clear from Daryl with the wigs, and normally Bob's sporting his turban, the Maharaja. He's got a little tag there. It's good to identify people. I think where people get a lot lost, if you like, within the whole mix is once you start following a couple of brokers, your whole feed becomes brokers. So you do
tell
a
me
lot
about
of exposure to what everybody is doing, and obviously everybody's plagiarizing stuff. And to anybody out there that's starting, if you are going to take a reel that somebody has done, that's fine. That's very common, but don't do it verbatim. Change it, make it personal, make it something unique for you. So with me, not too far off what Daryl was saying. Actually, I was watching a TV program called The Great, and when I first started, my intro to TikTok was long. I didn't realize that people switch off very quickly. So I'd come on, hi, it's Ken from Contractor Mortgage Services for all your mortgage protection needs, and I do all that stupid stuff. And then I realized that when I looked at the stuff, it was like 3 seconds they'd already gone. I got it's Ken, and they're gone. And I was watching The Great, which is all about Peter the Great, Catherine the Great. And whenever they did something stupid, they'd smash glass after toast. They go, huzzah! And I just started doing the intro, just huzzah! And that sort of stuck. So now I get people messaging me, huzzah! And stuff like that. So it's obviously stuck with people. And I think you've got to find your own thing.
Love that.
You've got to find it. There's a guy, there's no name I'm shaming because we're all on a journey. But you see it all the time. Fixed rates from 3%. It's amazing. Come and join us. And if you need any help, please ask me. And there's just nothing there. And people switch off very quickly. I think you need a little bit of animation. You need something that's interesting. One big tip I'll give to anybody starting, it's only something I've started doing recently, is you've got to remember that first snippet when they're coming through is like a window. It's a shop window, and you can walk past all the shop windows very quickly. You've got to find something that attracts them. So having a heading that is clear to see, such as gifted deposit or whatever it is, they might stop and say, oh, actually, I wouldn't mind learning about that, so I'll stop and listen for a bit. So I think in your shop window, the first thing that they need to see is maybe a sign that says, what is it that is worth their time to stay and listen to you? That's one of the big things that I've discovered recently that's really started to generate more interest. That and what Bob was saying about his lives. Lives are transformative on TikTok. I know Daryl's hitting them hard. I know, Bob, you do them on a regular. Apologies, guys. I don't know if you're doing them, but lives are what really show people who you are. Your ability to answer questions on the fly shows your depth of knowledge. The way you interact with people, they get to get a sense of you. And from that, you will get business, because the leads I'm getting at the moment, generically, are coming from, or in the main are coming from, the lives. Not so much the reels, but the lives. They see you on the reels, they follow you, they get notified about your lives, they'll come on, they think that they get a sense of who you are, and then they'll ask you to help them. That's what I would say. And sorry, guys, I've milked that a bit.
No, very good.
Sorry, Katie, do you want to jump in?
I'm yet to explore TikTok. I think that's just, I get quite a lot from Instagram. Instagram's my main social media. I don't do much on LinkedIn. When I do, I get loads of impressions and followers, and it's very, it works, but I focus mainly on Instagram. I do a 10 minutes at 10, a live, which at the moment I'm kind of going quite hard about wills and life insurance and trusts and things that could go wrong, because it drives me insane that so many people don't know about it and don't take it seriously. So something will kind of bother me, and that's where I get my content from. But I think the biggest thing with any social media is to be consistent, which obviously isn't always easy at 10 o'clock when every lender wants to do a webinar at 10. But that's, it works. Social media works. I definitely think people buy people. Like you said, Ken, anyone can get, and Bob, anyone can get details of fixed rates and lenders. And, the advantage that we have is we get information a little bit earlier, so we can obviously always inform our followers, but they need to see you, and people buy from people. So a lot of my clients that have come through Instagram, it's been because they've seen me live, or they want to work with me rather than I can get something else someone else can't.
Yeah, it's interesting. It very much seems to be those people are doing it well at having success on Instagram or TikTok. Those tend to be the two main ones. LinkedIn a little bit. Facebook hardly ever gets mentioned now, which
I was going to
is
say,
quite interesting. But Mike, is that
I'll
something
throw my
you
hat
do?
in.
Yeah, go on.
For me, it's Facebook.
Brilliant. That's really interesting.
There we go. It's. I'm not getting you 20 leads. We're not getting our 20 leads in a day from it, but we're getting 6, 7, 8 leads in. I'm big on the reels, to be perfectly honest. Getting anywhere between 10 and 15,000 views on a reel that we do. And as Ken pointed out, just because it's a view, it doesn't mean they've sat and watched the whole thing. But we try and keep it different. Again, talking about your fixed rates, talking about your base rates, trackers, and it's boring. And I'm pretty well known in the local areas for having a bit of a dry sense of humour, and we sort of win business because we're black and white. We say it as it is. We don't hide. We also do a great segment on a Monday called Mortgage Offer Monday, where one of our mortgage advisors picks up the phone, speaks to a client who literally just had a mortgage offered, and the amount of customers that we've had, clients we've had contact us and say, "Oh, I'd love to be on your next mortgage offer video. Well, let's get you booked into the diary."
I
then.
love that. What great idea!
Wow.
It's so simple.
But
It's a
it
really
is.
good idea.
It's simple. I mean,
Yeah.
It's, and we've had some assistance as well, and we can sit and talk about. You've got all these so-called marketing gurus on social media that will approach you, no mortgage background whatsoever. But as a mortgage advisor, you've got so much help within the industry. And I know that obviously the show's sponsored by MPowered, but I don't know if people are aware, but at the time, my BDM, Matthew Surridge, they were MPowered were offering marketing assistance to businesses, and it was just absolutely fantastic having compliant help from a lender as well. That I'd never seen anything like that before. I'd never seen HSBC or Santander come and ask me for help if I needed help with my marketing. So there's assistance within the industry if you're starting up or you feel like you need to grow your client base. There's help out there that you don't even have to pay for. And I think it's knowing where to look and knowing what to talk about and just knowing what your persona is. I mean, my persona, I will never wear a shirt and tie. That's just where I am. People don't want to sit down with people in suits. They want to sit down with your local lad from the area with a hoodie on, and that's you catch me on any video, and I have got a hoodie on. That is what I wear. It's not as erratic as that amazing hairpiece that I can see in front of me, but it's
real, Mike. It's
real. but that is me to the point where we've got our own branded State and Mortgages hoodies now. So it's again, find your persona, know what your market is, keep everything short and simple, because if you don't catch their attention in the first 3 seconds, you've lost them.
But I think,
Mike, let me just jump in, Monty. The 6F rule, okay, very quickly to summarise it. It's a case of being fresh, state the facts, be fun, don't be fake, be friendly. And most of all, a lot of this is free, so make good use of it. All right, so I think there's plenty of fake news out there at the moment, and that's what is worrying for me. So
I'll come on to that in a sec. I think that's really interesting, and Mike, I totally agree with you with the branded hoodies and all of that. We're very down to earth, not hiding behind suits and ties, and I think that's it's about finding your authentic self, and I think that's really important. And I think people nowadays can spot frauds and fakes quite easily. However, I do want to look at a bit of the dark side. And just by the way, you mentioned a lot of some lenders do offer sort of some free tools. I know that Marketing Assist, MPowered, have got this tool, Marketing Assist, which is really good, which helps you automate your social media. So that's a really excellent tool. So look at that. And I would say it would be good for more lenders to do that kind of thing, because actually there are a lot of business owners there. It's another way of promoting themselves by helping the business owners, helping with their marketing. They've got big marketing teams, so and a lot of businesses only have tiny budgets in our industry. So it'd be great to have more help, or none. Yeah, absolutely. And it'd be great to get more help from them.
It's compliant as well. That's for me. That's the big thing. If it's coming from a lender, it's compliant.
Yeah. So about this dark side, then I've seen some pretty bad things on social that mislead people. Is it the Wild West out there? And how would you like to see it policed? What should true advisors be doing to eliminate, blatantly provided inaccurate, false, or misleading advice on social channels? Is there a proliferation of sort of the gurus who say, just do this and you'll be successful overnight? And how do we deal with all that?
I'll answer this one.
Go on, Katie.
Really quickly. I think the only thing we can do is give the right advice and inform them correctly when they come to us. The amount of mortgage TikToks I get sent on a daily basis from friends that are like, have you seen this? Have you seen that? I'm like, it's America. It's not you. It's, it's, you can't police it, and we know you can't police social media with the loads of stuff that's out there in every topic that there is. I just think we can only continue to do what we are doing, which is giving the right advice, and showing why it's wrong or how it's wrong when it comes up, without digging out other people or naming and shaming people. I mean, some of the things that we see in our WhatsApp group are, it makes your hair curl.
Yeah.
That some of the content that people are pushing out there, but a lot of it's clickbait. A lot of it, they're never going to be regulated. They just want to give content about something that will get them followers, I think.
I think just to add to that as well is I've changed some of the bits, not so much what I promote, but certainly on my bio. When you click onto my TikTok account, you'll see my bio. I've got something called Linktree. Now on that Linktree, it's a snapshot, and you can put any link you want on there. So I've got my FCA registration details on there. I've got my company details on there. There's mortgage affordability calculators on there. I've got my links to national and trade news items. There's various tools on there that will instantly, from anybody that's viewing, be able to recognise a hoax, i.e. a false advisor, to someone that is regulated and someone that is giving formal advice. So I think for any viewers out there is really just check the information that you prepared, that's being shown you, because not everything you see is the truth. And it's worrying in actual fact that it is being abused by certain individuals and certain people within the industry and outside of the industry having quite a large opinion, which isn't exactly true.
I think people can validate you, can't they? When I first set up, one of the first tips I was told is get yourself a website. So, well, I don't really use a website. It's not for you. It's for people to validate you. It's for people to see if you're genuine. And from that, then I started doing the reviews and Google reviews and doing it that way to try and get more validation about who I am. But you're right about the link tree. It's very useful to have that. I mean, we all know there's certain individuals in TikTok and other platforms who are blatantly just clickbaiting. But those of the people listening who are appointed representatives of networks, a lot of networks don't allow you to use social. They're so scared of you saying the wrong thing or doing the wrong thing and blowing back on them. There are a lot of very, very tight on what they allow you to do. But I think the movement is moving towards social media is where people are educated now. And I think it's starting to open it up. I'm a DA. I have a lot of freedom. I could pretty much go on and say what I want to some degree, but I don't, because I want to be treated as someone who's industry respected and someone who knows what they're talking about. So I'm very careful. If I say, look, this is the rate, I'll always caveat that with today, but it might be different when you come back. I think when you've been around for a while, you sort of know how to throw in the caveats, but still make the reels or the TikTok videos interesting.
Yeah, it's interesting. I mean, the other part of the dark side is it's quite interesting how people use social media. And someone said to me not long ago, in the form of an apology, that they felt they had to take me down in order to get popularity themselves, which is something that I fundamentally obviously disagree with that attitude, not just for my sake. I've never agreed that to get a leg up you have to tear someone else down, and I've always found the opposite is true. Yeah, go on, Ken.
We've seen other brokers who are trying to break into the market who will go on other mortgage brokers' lives, start answering questions and saying to them, if you need more, come to me. Totally disrespectful. Totally like what you're saying. They're trying to infiltrate, bring you down by sort of getting involved. It's bad practice.
Yeah, and I just think it's there's another trend I hate, that groups seemingly ganging up to cause issues for people, which is damaging not just to that individual's mental health, but doesn't it? It portrays an unpleasant and unprofessional image of our industry to the public. And I think sometimes people on social forget that the public is watching everything we say. The regulator is definitely still watching everything we say. So how do we deal with that? When is banter not banter, and how do we know when someone is being authentic?
Yeah, I think where I'm probably a little bit off-piste to some of the other guys that are on here, I've got very much humorous side of videos. There's singing, there's comedy effects going on. You know, my interactions with dealing with lenders, my interactions with dealing with consumers. There's a whole bag of, I wouldn't say it's not structured to a sense, but it's supposed to be fun. It's reliving a moment. In that essence, there's no wealth warnings on that. But where I'm actually giving factual information, this isn't advice, but something that's been publicised, there'll be a wealth warning on there. I'll be stating the obvious, and it will be giving clear indications as to what that message is. So I think, again, being part of a directly authorised firm gives me a little bit more autonomy. You know, I've gone through strict compliance in terms of wearing the wig, the phone, the funny dances, the music.
Are you saying your wig is regulated?
It's been approved. It's been signed off.
Oh,
right. Okay.
It's signed off
been
by
signed off.
compliance.
Yeah, it's been signed off. So
Regulated.
yeah, it needs to be regulated. But no, I just think I agree. Again, it's touching on points earlier on. I think larger networks in particular, I think there's probably some itching brokers out there that want to get onto the social side of it and probably feel heavily restricted because of what they could or can't say, which probably turns a lot of them away at the moment, which is a real shame. But, you know, obviously, you know, the networks are dealing with a bigger pool of brokers, so it's harder to modify and monitor what these guys are doing.
I think back to what you said, Monty, in regards to, you know, getting together and saying stuff or you know, that still amounts to bullying, and none of us are here for that. You know, if we see something that's categorically wrong or pushing people to commit fraud or lie, or then obviously we're going to put a comment underneath or say, oh, you know, how do you get to that, or are you FCA regulated? You know, there's when there's blatant rubbish being pushed out there, then
hard not to challenge it, isn't it?
Yeah. Why as a qualified regulated advisor, you know, you need to let the audience know that what this person is saying is categorically untrue, and you're going to get in a lot of trouble if you do what they're saying.
Yeah.
But to actually, as a group, you know, no one goes out of their way to bully anyone. That's not what we're here for. Well, not me, no, none of us. But
I find most of the brokers in the community are actually very supportive. It's like when Bob and Daryl on, now that I know you a little bit more of late, I'll jump on your lives and say, hi, how's it going? Great live. I think those just little things like that.
Totally agree, Ken. Yeah.
Yeah, because we're all within the same space. We've all got the same aim, which is to grow our business, to become respected, and essentially earn more money. Let's be honest about it. All our platforms are there because we want people to see us, think of us when they come to a mortgage. But support each other. Don't pull each other down. The amount of people that get in touch with me and say, Ken, I see what you're doing. I'm trying to get into the space. Is there any tips? Just share the knowledge. There's enough space in this market for everybody. Why be that type of person that pulls other people down just to rise?
Yeah. I totally agree with that. In my career, it's all about, and that's the ethos of why we're here. Certainly, I know it's all your ethos, which is why we have Newspage at all. It's the more voices are out there of some serious, some not so serious, all giving good information, all being authentic, all being themselves. Those are the voices we want to support, and the image we therefore portray to the consumer ultimately and the regulator is one that this is a really professional, good, fun industry that's home to a wide range of diverse people all trying to help each other and help their clients, and that's the overriding message that we should be giving out.
To change the perception that financial advisors are these old men in suits that are boring and just, you know, I think all of us are breaking the mold with what the public think a financial advisor looks like.
Yeah.
And also
100%.
the age group. I mean, we were talking, sorry, Bob, to throw you into this, when Daryl was saying you're close to retirement, that sort of thing. But I think a lot of us, none of us here are like 15 or 20. You know, we're all mature people to some different levels. And yet all of us are in social media in one way or the other, whether it's Facebook, Instagram, TikTok.
Yeah.
We've all embraced it. It just shows you there is no demographic. I'm surprised that the age group of people on TikTok and the other platforms, they're much more mature now than I thought they would be. All the kids are watching the people dance. The people a little bit older are watching people like us, which is crazy.
I'm watching Daryl
a lot of kids. Sorry, a lot of kids are going on to social media to get information. I know. I was at a conference last week, and the owner of Lifetime was talking about his daughter and saying that, you know, she set up her business and has worked out how to do salary and dividends and this and that and all the accounting. And when he asked her where she got the information, she said TikTok.
Yeah.
So, you know, that's where kids, if you like, are going. That's their first port of call for information.
A lot of them are using it as a search engine now. Instead of Google, they're using TikTok.
Absolutely. Yeah.
I need to get on it.
Right, you need to get on it. And Ken, please never ever call me mature. I am not mature. I've failed if anyone thinks I am mature.
Like a fine Swiss cheese.
On that bombshell, we've run out of time.
No,
we've run out of time.
What?
I know, it's too quick.
It's flown by.
Quick. So hopefully you've had some good nuggets of wisdom there from our fabulous panel. So thank you, Daryl, Mike, Katie, Ken, and Bob. You've all been elite. Go out and find everyone on their social channels, support them, and we'll all support you as well. If you want any tips, I'm sure any of the people and myself are more than happy to have a chat with you and tell you all the things we've done wrong and some of the things that are going right, because believe me, I've made so many mistakes on social. So an article about the live will appear on the intermediary, and obviously I do encourage you all to get involved with the news page and social media. The more voices we have, the better. And remember, sometimes banter is not banter. Always put yourself in someone else's shoes before you say something unnecessarily hurtful. If you've enjoyed it, I've been Andrew Montlake. If you haven't, I've been Jemima Puddlethwaite. Until next time, have a great month. Bye.
See you later.
See you later.
Bye, guys. Take care.
Bye.